April 2nd, 2025 will forever be remembered as the day American industry was reborn, the day America's destiny was reclaimed, and the day that we began to make America wealthy again. We're going to make it wealthy, good and wealthy. For decades, our country has been looted, pillaged, raped, and plundered by nations near and far, both friend and foe alike. American steel workers, auto workers, farmers, and skilled craftsmen. We have a lot of them here with us today. They really suffered gravely. They watched in anguish as foreign leaders have stolen our jobs, foreign cheaters have ransacked our factories, and foreign scavengers have torn apart our once beautiful American dream. We had an American dream that you don't hear so much about. You did 4 years ago, and you are now, but you don't too often, and for many years and decades even, you didn't hear too much about. Our country and its taxpayers have been ripped off for more than 50 years, but it is not going to happen anymore. It's not going to happen. In a few moments, I will sign a historic executive order instituting reciprocal tariffs on countries throughout the world. Reciprocal, that means they do it to us and we do it to them. Very simple. Can't get any simpler than that. This is one of the most important days, in my opinion, in American history. It's our declaration of economic independence. For years, hardworking American citizens were forced to sit on the sidelines as other nations got rich and powerful, much of it at our expense. But now it's our turn to prosper, and in so doing, use trillions and trillions of dollars to reduce our taxes and pay down our national debt, and it'll all happen very quickly. With today's action, we are finally going to be able to make America great again, greater than ever before.
Countermeasures, dip in market prices, and Democrat outrage are expected to continue as a barrage of reciprocal tariffs were unleashed to correct what the US administration called unfair treatment, evident in higher tariffs the US have been subjected to over the decades. US stock futures dropped as investors weighed the implications and as a mix of negotiations and promise of countermeasures followed. Analysts will be watching for the impact on US inflation and any further global fallout. Hello, welcome to Global Business Insight, where we look deeper at business stories all over the world. It was more like a Trump campaign event than a presentation on trade policy, even as friends had to admit that there would be short-term pains and what looked like uncertain longer-term benefits. The calculation for current tariffs plus estimate of non-tariff barriers by other countries are already being criticized as subjective. The Democrats quickly called it economic poison, a reckless tsunami of tariffs and new taxes that will be borne by US consumers, and Europeans said it was all wrong. But most are not rushing to retaliate. Indeed, some are warning against hasty retaliation. The International Chamber of Commerce, which represents 45 million businesses in 170 countries, said retaliation would be a lose-lose game. According to John Denton, Secretary General, he said this is without doubt a shock to the global trading system, but it need not result in a systemic crisis. The US is an economic superpower, but only accounts for 13% of global imports. It's not exactly true that American goods are not doing as well in foreign markets because of tariffs. Perhaps the Europeans build better cars, the Asians make better computers, and loss of competitiveness is a bigger problem for the US than tariffs. And deploying higher tariffs will blunt the motivation to improve competitiveness. But Trump does not see it that way. So what did the US president say? It was a hybrid approach that combined a flat 25% for foreign cars with a minimum 10% base for countries that charge lowest tariffs and friends, with higher rates for offenders and the more aloof allies like Europe. Most tariffs will take effect at midnight. Some, like on Japan, will take effect from April 9th to allow some time for negotiation. The worst hit were China and the highly competitive Asian tigers making all the computer parts, iPhones, and Nike trainers. For China, imports were already subject to 20% tariffs. Another 34% in reciprocal tariffs is being put on top of that, taking tariffs to 54%, which is steep. This is being justified by the unproven suspicion that Chinese goods are vastly subsidized and dumped abroad as Beijing needs to create jobs for the billions of Chinese workers. The menu included 20% tariffs on imports for the United Union, 26% tariffs on imports from India, 25% South Korea, 46% Vietnam, 32% tariffs on imports from Indonesia, 10% Brazil, 24% Japan. There are some vulnerabilities. For example, a new 26% tariff on Indian imports could hit generic drug makers and increase the price of many of the off-patent drugs that make up the majority of US prescriptions. The drug industry is not as elastic in terms of capacity and ramping up production, and unlikely to be able to meet up in terms of the gaps or to ramp up US production quickly. Almost half of generic drugs sold in the US in tablet form are made in India. Looking at the main African economies, Mauritius and South Africa were pounded hard. Mauritius 40%, South Africa 30%, Nigeria 14%, Kenya 10%, Tunisia 28%, Egypt, Morocco, Ethiopia all 10%. The UK, Australia and Brazil received 10%, the lowest rate of levies. Australia is part of America's security network against China. El Salvador, which has accepted deported migrants from the US, perhaps were being rewarded with a 10% tariff rate. Argentina, whose president is a friend to Trump, also got 10%. Saudi Arabia and the UAE also got off lightly with just 10%. The British government are still focused on securing a US-UK trade deal and see the US as its closest ally, and most likely are focused on getting that Anglo-American pact in the hope of reducing that 10% even further lower. There are some winners. President Donald Trump excluded Mexico and Canada in his global reciprocal tariffs and maintained tariff-free access to the U.S. market for goods compliant with the North American Free Trade Deal, USMCA. It's unclear, but apparently some items are exempt, including energy and minerals not available in the U.S., gold bullion, and even some goods Trump has put other duties on already, such as steel and aluminium. The president also signaled a separate set of tariffs to be imposed on copper, pharmaceuticals, semiconductors, and lumber. Still some lack of clarity in terms of some areas. But how are countries reacting? Sweden's Prime Minister Ulf Kristersson has said he favors negotiations to reduce tariffs. Italian Prime Minister Giorgia Meloni called it wrong and warned that the tariffs would not benefit anyone and undermines the traditional alliance between the US and the EU, adding that everything will be done to reach a deal to avert a trade war that weakens the West. Negotiations may be complicated by opacity of US computations, and it will have to be country by country, not as quick as many countries are going to be queuing for attention. Most will have to live with these tariffs for a while, but don't rule out retaliation. Also, the scope to cut these tariffs remains if partners can remedy their differences quickly. China can do a deal that accommodates the Panama Canal and TikTok issues. Negotiations could rope in other geopolitical tension points as the US batters lowering tariffs for geopolitical concessions. Markets, after the announcement, took a dip as futures turned red. The expectation is that sentiment today will be soured by the immediate concerns as the fear factor intensifies. There is also still some uncertainty on how negotiations will progress. Shares of the major multinational companies tumbled in extended trading. Shares of big sellers of imported goods were among the hardest hit, with Nike and Apple shares expectedly dropping about 7%. Japan's Nikkei 225 tumbled 4%. South Korean shares dropped over 2% just after Trump's tariff announcement. Not so liberating, at least not yet, for markets. We still have to wait to see how all this develops, with many unknowns, especially on negotiations and countermeasures. This morning, China vowed countermeasures to safeguard its own interests after sweeping levies were announced on all U.S. trading partners around the world. Also this morning, China's Caixin Services Purchasing Managers Index PMI rose to 51.9 in March from 51.4 in February, also higher than expected. European Commission President Ursula von der Leyen said the European Union was prepared to respond with countermeasures if talks with Washington failed. She added that the EU is finalizing the first package of countermeasures in response to tariffs on steel, and others could follow. Composite PMI in the euro area increased to 50.9 points in March from 50.2 points in February 2025. It rounded off the first quarter of 2025 with the third successive monthly increase in business activity, also the strongest since August 2024. Germany's service sector also saw further growth in March to extend its current run of expansion to 4 months. Canadian Labour Union Unifor says car maker Stellantis, perhaps one of the first victims of the new tariffs, will close its assembly plant in Windsor, Ontario for 2 weeks. Still in the US, Elon Musk has dismissed as fake news widely reported claims that his role in the Trump administration is coming to a premature end. The fake news said he would no more head the Department of Government Efficiency within weeks. South Africa's parliament passed a budget framework without the support of the second biggest party in the governing coalition. The Democratic Alliance, the African National Congress's main partner, opposed a rise in value-added tax. Smaller parties, however, helped the ANC pass the budget. Some good news from the UK, the headline S&P Global. Some good news from the UK, the headline S&P Global UK Services PMI Business Activity Index registered 52.5 in March, up from 51.0 in February, and the highest reading since August 2024. A renewed upturn in new orders helped to boost overall business activity, but growth was sustained by a relatively narrow segment of the economy, primarily technology and financial services. Asian markets plunged after the US administration imposed reciprocal tariffs on over 180 countries and territories. The heaviest tariffs were on the Southeast Asian emerging economies such as China, Vietnam, Malaysia, Thailand, India, Bangladesh, Taiwan, and Sri Lanka. According to the US, Cambodia charges them 97% tariffs, and the US in return is charging 49%. Vietnam's government is setting up a task force with other Southeast Asian nations to seek talks with Washington as they reel from being hit with some of the heaviest tariffs. Gold is up to a new record high as safe havens see strong demand. Well, that's all on this episode of Global Business Insights. Thanks for watching. This is Bode Oshosami. Bye-bye.